Hello everybody and welcome to Trading Tactics. My name is Brian and today I want to just take a quick look at the S&P 500. We're kind of in a pretty bizarre area when it comes to trading the S&P 500. Yesterday was a pretty tight range. It was a typical day, meaning that it stayed inside of initial balance pretty much all day. I'm not expecting much different from today. So if you want to find out a little bit how I'm planning on playing the charts today, how I'm planning on trading the S&P 500, the ES, then stick around until after the intro and stick around to the very end. Until then, please smash that like, notify, and subscribe so you can get some more content like this. Let's go ahead and rock out with the Okay, so here we are. This is just a look at yesterday, regular trading hours, no extended hours or anything like that. If you look over here to the right-hand side of the screen, you can see the current price is fluctuating around yesterday's value high and point of control. So where we open at is going to be pretty important to me. If we open inside of this value area, then I'm going to be, whether it's above or below the POC, then I'm going to be looking for a push towards the POC right at the open. Now, I'm not sure if I'm actually going to take a trade to target this. Depends on how much separation there is. If for some reason we open up way down here with regards to yesterday's POC, then that'll give me a little bit more confidence to take a trade and give me a little bit more distance, a little bit bigger of a target. Outside of that, I'm just going to be looking for us to escape the range today. I'm not interested in taking a whole bunch of trades from the inside of the range toward the outside. It's just not something that I'm very interested in doing at this point. What I would prefer to see is for us to go from the high-low range from yesterday and work our way in like this, or we break out of it. So I'd be looking for evidence, specifically with the delta down here, to help me confirm that breakout. This guy over here is actually a 3-week composite going back to about February the 20th. And the reason why I did that is because we have it the market hasn't gone anywhere. We've explored a little bit higher, we've explored a little bit lower, and we've pretty much ended up in the same area that we've been chopping around in for a while, battling out this all-important psychological level at 4,000. 4,000 is going to be an area to pay attention to on our charts today. I think that that's going to end up being a battleground once again. Yesterday, we rejected out of it pretty hard twice, and each one of these would have produced outstanding trades to the downside. Down here at about the 39.74, 75 area, we've rejected that value pretty sternly as well. Throughout the night, we've chopped down. We've come back up with the U.S. jobless claims coming out at 7:30 Central Time. So it looks to me like we're setting up to be to battle it out inside of this consolidation. My trading plan for today, right now, is to try to fade off of the top. Okay. I want to short the S&P 500 down if at all possible. I'm going to be looking for signals to go short there. My backup plan to that, if we start working this entire range, is just going to be to fade it up. Outside of that, I will be cognizant of the fact that we very well may break out and try to explore these higher prices again, or that we may completely and totally reject that idea. Now notice I pretty much have every possible scenario laid out at these two areas. We can go up, we can go down, we can bounce, we can reject, we can blast through it, whatever. I get that. I'm not trying to predict the market and trying to figure out where it's going to go. As far as that's concerned, that's kind of off the table right now with the profile setting up the way that it is inside of a balanced profile. So now we're looking just to break the balance. And as soon as we break the balance in one direction or the other, it'll be important to look for that development of structure on one side of this value area and of this range or the other. Get positioned to the right side of the market. Take your shots, take your opportunities, and get your profits. Thank you for tuning in for this little short video. I'm going to try to start doing these a little bit more often. I know I've been a little unattentive to YouTube for a while now, so I'm going to get a little bit more disciplined and start trying to produce some more videos for you. Hopefully this helps you out. You can see some of my key levels here on the side of the chart. I will scroll up. You can see the other levels I have. Just go ahead and freeze your screen if you want to check out these key levels, see what they do for you on your charts, and kind of track them throughout the course of the day. With that said, I hope you all have an absolutely great day. Good luck in your trade, and take care, and God bless.